So what I want to talk to you about today is something that's really topical at the moment in the media. What I'm talking about is tax, and it's really topical at the moment because of what is happening in the political world, specifically with David Cameron and the offshore family trust. There's a lot of talk out there in the media at the moment, and there is a huge amount of misunderstanding. So I just want to talk to you today about the difference between tax evasion, tax avoidance and tax planning. So just starting first with tax evasion. Let me state this really clearly. Tax evasion is illegal and deliberately avoiding paying tax. It's against the law. To give an example of tax evasion, that would be not declaring all of your income to the taxman and therefore not paying the full amount of tax that is due. Tax avoidance is not illegal. Some may regard it as morally questionable, but let me just give you an example of what tax avoidance might be. Investing money in an ISA. Because investing money in an ISA will help you either avoid tax on any interest that you earn or any capital gains. Now, lots of people will have an ISA, but they wouldn't regard themselves as necessarily doing anything that's illegal. Investing money into a pension. Most people receive tax relief on the amount of money which they invest into a pension, which means that they are paying an amount of tax less than they would have done had they not invested that money into a pension. Now, I don't think there's many people in this land that would think that putting money into a pension was immoral and in any way avoiding tax that they should be paying. But this brings us on to the third issue, or the third subject, which is tax planning. Tax planning has always existed, and again, it is not illegal. But part of the problem that has occurred over the last week or so because of the David Cameron tax affair situation is the whole question of tax planning has been brought into question and whether people indeed should be doing it. But let me state this really clearly. Tax planning is not illegal. An example of tax planning might be that you structure your financial affairs so that you don't pay any more inheritance tax on your death than you otherwise need to. So that does open a whole debate of morality. I fully accept that. But our view here at Midlands Investment Agency when it comes to tax planning is that most people put family before the state. So whilst we don't get involved in any contentious tax planning issues, we certainly have clients that like to structure their personal affairs so that their family benefit as much as possible from their estate. So there are some tax planning opportunities out there that are perhaps more contentious, which the Cameron family have been involved in. But as far as David Cameron is personally concerned, he was a beneficiary of that trust, which was set up by his father, not him. And very few people choose to be beneficiaries. They become beneficiaries because their parents have decided that their children should benefit. So it's slightly unfair to be tackling David Cameron on this issue, and if anything, there should be a wider debate about tax planning. And our concern is that policy could be made up on the hoof almost, just because of the reaction of certain people in the country that feel what he has done is immoral. The question of whether he declared the information sooner rather than later is a separate issue entirely from the tax planning position. So my name is Martin Dodd. I look forward to talking to you again on another topical financial issue.